approach with no fear. The stage is set, all engines go. Welcome to the angle. Let's start the show. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle. No time to delay. Markets rise and markets fall. Atomcash is ready to answer the call. While the bulls charge hard and the bears dig deep, the angle will keep you on your feet. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay. Cashing in on the highs and lows where the wind of fortune constantly blows. No looking back, keep your eyes on the prize. Fuel to run with a fire that never dies. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay.
Good morning, everyone, and welcome to the most entertaining, intellectually stimulating financial podcast in the entire world. You're watching the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Adam Cash, and I'm bringing you the firepower your financial life may have been missing. Now, whether you're new to trading or a trading savant, I am to turn complexity into clarity with a shot of adrenaline. Now, today and this whole week, we have a very, very, very interesting week. As I've been saying on the program last week, we are heading into the Thunderdome of trading. Yes, the Thunderdome, meaning we are heading into Vixpiration. We're heading into an FOMC rate decision, and we're also heading into OPEX. So a lot of big things going on this week. You're going to want to know how to stay prepared with that, and I'm going to help you keep yourself safe, most importantly, today, tomorrow, and tentatively Thursday. I'll be here as well, so make sure you come hang out on the stream and know exactly what to watch out for. Now, we got a lot to talk about and a little time to do so because we got 10 minutes till the market opens, so let's run through everything now. As I like to do with you guys before the market opens, we're going to look at our catalyst watch for the day, and we don't really have too much coming down the pike, at least today in terms of any kind of economic data or anything. We do have Trump speaking today at 2 o'clock, so obviously that could fluff around the market depending on what he says. And then he's also signing a memorandum apparently at 4 o'clock. Tomorrow as well, looking like a mostly pretty quiet day, at least in the U.S. markets. You do have industrial production, but outside of that, in the 20-year, outside of that, nothing really going on. Really gearing up for that Wednesday. Obviously, FOMC, that rate decision is going to change a lot of things in the market. We're going to see what really happens. We're going to get more into the weeds on that in a little bit here. That's going to be at 2 o'clock on Wednesday. So we'll go over that in a little bit. Now, let's look at the market real quick. Take a look around, see what's happened in the pre-market so far. Obviously, the big news, maybe not obviously, maybe you're just tuning in right now. You haven't taken a look at the market anywhere. Tesla up about 7% on Elon Musk purchasing approximately $1 billion of Tesla stock. So very, very, very big move here in the pre-market on Tesla. Like I said, I was bearish on Tesla if it was under 360. It's broken 360, and since then, it's been a rocket to Russia, so to speak. It has been going and going and going and going. In fact, is that to the penny? Hold on, let's see. Let's see. Look at that rejection right there, just shy of the 0.786 retracement here. High or pre-market high, 430.35. That 0.786 retracement right here at 430.43. So you're going to want to watch that level into the open. If you are trading Tesla, already long Tesla, that would be the area you want to watch into the open. Now, you also had some news come down on NVIDIA. So far, I mean, sold off a little bit here in the pre-market, kind of grinding its way back up. I need to refresh my memory because I don't really remember, but I knew there was news. I'm not reading through this. There was news. But the market didn't really seem to care. I mean, obviously, we sold off here pretty starkly. Got down to 172.53, grinded our way back up to around this 175 area. So off a little bit from Friday's move. Nothing too crazy here. Still in this zone as we head into FOMC, and I anticipate it basically sitting in this zone until at least Wednesday. Outside of that, the market as a whole pretty flat into the open here, grinding up. I mean, flat in terms of a percentage gain, but we've been grinding up from the open. Still pretty solid move here, just shy of 660. Pre-market high right now, 659.65. Outside of that, it's looking like a pretty quiet Monday morning. Now, I'm not personally anticipating too much craziness between today and tomorrow. Little caveat there. Tomorrow, watch volatility very closely. We'll talk about that on the program and why. We'll talk about that tomorrow on tomorrow's stream. But at least for today, at least I'm not anticipating anything crazy here. But I could be wrong. We'll see how the open goes. As I tell you guys, Monday mornings especially, I like to take it very slow. I like to wait at least 10 to 15 minutes unless there's a amazing setup. Typically because your IV is very high. Again, typically IV is higher. You see a lot of repositioning, a lot of movement where things are a little less certain, at least in my opinion and from my experience. So Monday specifically, I do take it a little bit slower in the morning if I take any trades at all. So we'll see about that. I do want to highlight to you guys Grab. I didn't shut up about this on, I think it was Friday's stream or Thursday, whenever I streamed last. And I mentioned to you guys how important this 591 level was. Basically all the other levels I highlighted, but this 591 level puts you above everything on Grab. Every daily, weekly, monthly resistance on Grab, at least in the near term. I will continue to sing the stock's praises. I believe this is a very, very, very strong move here cooking up on Grab right now. Look at the volume, ramping volume on a hard push to the upside after a technical breakout. You couldn't want anything more than it also being bullish, I should say, on multiple time frames. Look at this weekly candle here. That's a 16% gain on this weekly candle. Low was 509, closed out at 603, basically closed at the high of the candle, right? Let's see, it was 3 cents off of the high, closed at 6. And the monthly, look at this candle on the monthly, broke the monthly SAR as well. You guys know I talk about that quite a bit. So this is going to have legs, specifically this week. Once we get through Wednesday, if this can hold over 6, and I believe I highlighted this on the last stream, we've got a lot of OI on the call side, specifically sitting at 6 and 6.5, that the market makers more than likely are going to have to delta hedge for, and not much, I guess you could say, conversely, resistance on the chain on the put side of things, because bears were more positioned down here towards 5 and 4.5. So you have a lot of bulls here positioned between 6 and 6.5. You're going to want to watch these whole numbers, 6 and 650, as key points of where we could see delta hedging occur. Now, again, delta hedging, when we talk about it on this program, isn't specifically when it passes 6 and goes to 601, market makers are buying a lot of shares to cover the underlying. That's not exactly how it works. Once there's a heightened probability of calls going in the money, that's when market makers will go out and actually purchase shares to cover the underlying, because obviously they need to deliver those shares to people who may exercise those contracts. So market makers will purchase shares in order to cover the ability for them to actually deliver those shares to the people who bought those contracts. Now, we took a step further on Grab specifically and looked out on the next following weeks here. So this is September 26th. Now, keep in mind, these are weekly contracts. You got another 3K park there between 6 and 6.5. Another 3K park there, October, between 6 and 6.5. And it gets a little thin here, but I remember the monthly contracts in October were good. Yeah, look at this. Monthly October contracts on Grab, 63K OI at the 6, 18K at the 7, and even 7K at the 8, and even got some here at the 10. So you've got the ability for a gamma ramp throughout these weeks. As long as Grab can continue to find volume over 6, as it pushes specifically over 6.5, and my next technical level, or at least take profit point, 6.61, that's going to be your real launching pad to potentially have a gamma ramp here and push to the upside. But over that 5.91 level, that is your biggest level. That's a huge break on the weekly, on the monthly, on the daily, on higher volume. Now, if I'm a betting man, today it needs to cool down because this was a massive move. It was 8.5%, which for this stock is a very big move on Friday. And the day prior to that, it was a 4% gain. So between the 2 days alone, you had 12% gain, which again is a bigger move for this stock. So I would anticipate some level of consolidation before continuation. So as long as it's staying north of that 5.91 level, I love this name, especially if you're trading equity. I personally, again, full transparency, I have exposure via leaps and equity on Grab, so exposing my bias here. But the chart speaks for itself. I have a video up on my channel where we started talking about it back here somewhere in like the mid 4s or whatever. This is a fantastic technical breakout. A lot of things highlighted here. And I'm starting to see some people start to talk about it on social media, which is always great to get the people to FOMO into my position that I'm already long on. That's fantastic. I love that. So this is a great name. You're going to want to keep your eyes on Grab Holdings. Okay. We have about 3 minutes until the market opens. So guys, I do this twice a show. I'm going to do it once now. I'll do it once later on. If you're watching right now from wherever you're watching from, YouTube, X, Instagram, wherever, do me a quick favor, interact with the stream, drop a hi in the chat or whatever, say good morning, Negum, good morning, my friend. He's over on YouTube watching. Drop a follow if you haven't already on X, and don't forget, once we hit over 500 subscribers on the YouTube channel, this will be an everyday show, so if you enjoy the content, you want more of it, pop over to that YouTube channel, hit subscribe. We're at 145, so over the last month, channel has grown over 100%. Actually, I'm a very small fish on YouTube, but we are growing exponentially. Thank you for your support, and I love doing this content for you. I actually just uploaded a segment of that open video that we did live, so that's actually been getting a little bit of traction. If you want to check that out, if you have exposure to open, maybe consider watching that video. Quick synopsis here, looking at open. What I'm theorizing so far is looking like it's going to happen. And if you know what I'm talking about, you were here and you already know. And if you don't know what I'm talking about, check out the video. Good morning, Tom and Hatchet. Hope you guys are doing well. Thanks for saying what's up in the chat and supporting the channel. All right, we're looking like we're going to open around 660 this morning. Right around there. I do want to take a peek at our sectors real quick here. All right, so our defensive sectors are up in the pre-market here. XLU, XLE, and XLP all up. Tech marginally up, not that much. We're going to come back to this once the market opens. Real estate, keep an eye on real estate this week, especially with rates. Rates have been dropping. Now, depending on what side of the fence you sit on, this can be good or bad. Typically a good thing, because typically when rates are lower, more people are willing to borrow for a mortgage. Consequently, more people are buying houses. Consequently, inventory gets snapped up, which is good for business, especially if housing prices are going up. So right now, housing prices are going up, but the amount of borrowers are down. So if that problem gets fixed, where the 30-year comes down, you're bringing more buyers theoretically into the market. Consequently, real estate should continue to the upside. So this is something you want to watch very carefully. The FOMC decision, while it doesn't directly affect mortgage rates, could have an impact on this. You're going to want to watch your 30-year Treasury note and FOMC to kind of get an idea of which way the real estate market could swing. This is an area of the market I'm very interested in right now. As part of my thesis, real estate and hard assets, when the market tends to go into a recessionary period of time, or at least a threat of a recessionary period, these hard assets tend to retain their value. So something like real estate is somewhere where you could still be moderately defensive in the market and still expose yourself to a little bit of growth if we're seeing rates cut, especially if you're in the mindset that we could see a midterm, a little bit of a pullback, recession, whatever. You might see some people flood to real assets, regardless of the price of lumber. So this is something you want to keep an eye on as a potential trade idea. Not yet, but soon. All right, market just opened, so let's pop back, and we'll go through our sectors again in a little bit. Alrighty, pop over to SPY. All right, like I said, we're opening here right around the 660 level, and if you're coming in late, we are typically going to wait 940, 945-ish before getting too aggressive either which way. Let's get an idea of IV on the 0-day contracts. Pretty low. So IV is pretty low today so far, around 11 to 12%. Typically IV right now is sitting around, or your IV percentiles right now is around 14.99. So currently, and you can't see this because it won't pop up my window here, but your implied volatility is, your average implied volatility is 14.99 in the last rolling 52 weeks, and your IV percentile is 20%. So what that means is IV on the SPY, or on all the SPY chains, is actually lower than 80% of the rest of this year. So right now, IV is considerably low on SPY contracts, which is very, very, very interesting to me. Let's see something real quick. Okay. That executed. Hold on, I guess I'm going to do a quick update for the Discord. Filled. If you're in the Discord, that swing trade I alerted that was a limit buy has now filled. For what it's worth. Okay, back to everything else. Here we go. So watch this whole number, just pretty simple. It's the 660 area into the open here to kind of get an idea of how the market may react here, at least intraday. Grab coming down quite a bit here, about 5% on the open, back testing this old high. So this 5.72 area was that old monthly high. So that's all the way back to here, 11/29/2024. So retesting that level as now new support, old resistance, bouncing and going is going to be perfect for grab. That's going to be very, 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 very good. You're going to want to watch again this week to stay over 591. So you want closes over 591 through the end of the week. All right. SPY fluttering. I just made up a word. Fluttering around. SPY is fluttering around the 660 area right now. Q's getting a little bit of a push here. IWM, very, very wicky on the open on pretty decent volume here. About 270 per 1 minute here. VIX right now a little bit hot into the open with VVIX pretty flat. NVIDIA very volatile. It's a Monday, makes sense. Microsoft chilling around that 510 area so far. Apple up pretty nicely here, 1.3% into the open. Meta pretty flat, all things considered, 0.3% on the open. Google up another 2.5%. What a beast. Look at Google. And remember what I told you ever since we were back at like 160 bucks. I said, as long as Google remains bullish, this is your canary in the coal mine for all your Mag 7. All your big tech, it's Google. If Google's performing, the Mag 7 will follow. There's going to come a time where this gets too hot, though, because it is hot. It is hot. This chart is insane. This is a crazy move on Google. Good for the longs. I'm salty. I closed my $160 shares, but it is what it is. You win some, you lose some. Opens around 10 bucks. Tesla, again, big gap up off of the news from Elon purchasing 1 billion shares. Again, I will remind you in case you missed the open of the show, which I need to turn that off for a second. This level right here, this 430.43, coincides with roughly your pre-market high of 430.35. That's your 0.786 retracement on Tesla, currently sitting around the 200 MA and now POC, which makes a lot of sense here, right into open. If you are trading Tesla, this 419.81 is going to be your key that you want to see bulls defend today. If you are a bull, you want to break over that pre-market high. This is very hot. IV on these contracts is probably stupid expensive. Let's see. Okay. You guys can't see that, but that's okay. IV is at 76%. Typically, IV on this name is at around 66%. So hot, but not terribly hot, but still 10% on IV is pretty considerable. So be very careful day trading this. If you're already long this name, you know what to look out for here. That 419.81, and again, this 430.43. Would not short this today unless we see a key area that I can take a short. But I'm not really interested in shorting a big green candle, and then a massive gap up. I will wait. There may be an opportunity like there was on Friday, but until that opportunity presents itself, I will wait. Amazon pretty flat here into the open. Nothing too crazy going on there. And the market looking not too bad. A little weakness coming through on IWM. Let's pop over to our sectors and see what we got going on in every sector of the market now that we've been open here just for a few minutes. Eddie, good morning, my friend. You're back to you as well. Every morning when I'm live, Eddie drops a euro in the chat. So we gotta drop the euro back. XLE down a little bit here, so we're gonna mix bag on our defensive. So utilities moving up, consumers, staples, which again I've mentioned to you guys, it's been a weird one lately. It's just flat right now. Tech arguably pretty flat. I talked about real estate, materials pretty flat, industrials pretty flat, healthcare flat, but starting to trend lower. Financials pretty flat. Obviously, consumer discretionary is going to be up. Tesla and Amazon are a big part of consumer discretionary, so we're up 1.6%. You're going to want to see if a trend develops here. So obviously a big move on consumer discretionary. And comm services getting a little bit of a rally here. So kind of a mixed bag on this Monday morning with not a lot. I mean, obviously, like we said, Tesla's moved up quite a bit, so consumer discretionary is where your strength is. But right now, outside of that, comm services is the only real shining light here, both good and bad. There's nothing that's really overtly bearish or overtly bullish if we're excluding consumer discretionary, unless it's comm services, is what I was trying to say. So not too much to see here at all. We're going to wait and see what SPY does. It's looking a little weak up here. You form these multiple wicks around this, just shy of the 660 level. And like I said before the market opened, in case you missed it, I'll reiterate, I'm not really anticipating a volatile day today, and that theory is supported by our IV right now at our 0-day options, currently at around 11 to 12%, which is about 3% lower, which is pretty considerable, 3% lower than normal IV. So IV is pretty low right now, and that typically means the market's not really looking to make a big move either direction. Now, it could be wrong, and that can change as the day goes on, obviously. But without any news catalysts really coming down the pike today, at least expected, we do have Trump talking later. But outside of that, it's looking like, I believe, so far, my opinion can change here in like 10 to 15 minutes. But if we're staying like this right now through this open, it's going to be a pretty dull, flat, boring day. You're going to want to watch volume very, very, very closely today. Especially if you're a day trader, because that's going to be your key barometer for risk. For those of you who may watch the program new or you haven't seen before, my barometer for risk as it pertains to day trading is 100K volume on the SPY per 1 minute or 500K per 5 minute. Now, obviously, if you're trading an individual name, that may not necessarily apply, but that gives me an idea of market participation. That gives me an idea of how many people are actively trading the SPY, which is probably one of the most traded tickers out there, obviously. So if there is not a lot of market participation on the SPY, that at least tells me that I should be a little bit careful, regardless of what I'm trading, because there aren't as many market participants, which is a good and a bad thing. Bullish moves can be overstated and pushed to the upside, as can bearish moves be overstated and pushed to the downside. Because when there's fewer people participating in the market, price can get bullied around. I use the example of if you bought $1 million worth of SPY shares on a normal day with normal volume, maybe the price moves, and we'll just use whole numbers for simplicity, 10 cents. But maybe on a day where there's much lower volume, that same $1 million can move the price 20 cents because there's fewer people on the ask, there's fewer orders that are willing to be filled, so consequently price can get pushed either which way. So that's a real risk you have to at least understand when you're looking at the market, at least before a key event, I would like to say. So today, tomorrow, and obviously Wednesday, I think this FOMC is going to be one of the more anticipated ones, mainly due to the fact that, and as I've said before, I believe that 25 basis point cut is cooked in. It's baked in completely at this point. And now we're waiting to see if it's going to be 50. And if it's not 50 and it is 25, what does the market do? And what if we don't cut at all? I think we're going to see some downside on the market, which is why I'll continue to say I'm cautiously bullish right now, which is like a 60-40 bull-bear split, where I'm not looking to overtly run in short and swing shorts and be aggressively bearish, because right now the bulls still have the momentum. We're still going to slowly push to the upside, but it's at that point where, what's a good analogy? If you had, I don't know, a bridge of spider web, right? And you put a bowling ball on the spider web. It might hold, right? But you add another bowling ball and boom, the bottom falls out. That's kind of how I feel about the market where we're sitting right now, especially when we talk about our Mag 7 names, and some of them are in a very treacherous spot. So when we're in that kind of position, that's why I say day traders typically have a better edge right now because they can go back to cash at the end of the day and they don't have that overnight risk. Long investors can also take advantage of that if you're using tight stops on highly liquid names. That's the important part. If you're in a very illiquid name, you might have a bad time. I think the people who are most disenfranchised right now are swing traders who swing options. Now, again, I'm not trying to dissuade you from making money. Of course, if you pick the right way, you can make money. But that doesn't go without that risk. And that's my whole point in this program. I'm not trying to tell you if things are bullish or bearish, but I'm trying to highlight if things should be more risk on or more risk off. This current environment, the way the market's moving, where volatility's sitting, and where these big contributors to the overall market. So looking at our Mag 7 names, and 3 or 4 of them are in a very spot, that tells me to take some risk off the table, to be a little more withdrawn, to be a little careful, because I want to be here next week, the week after, the month after, the year after, etc. Not lose everything from a dumb decision I made, because I've made that mistake before and I don't want to make that mistake again. So if we don't learn from our mistakes, we never get better. And I'm trying to help all of you learn from mistakes, learn from my mistakes even, so you don't have to suffer the same pain I have gone through. That's the whole point of this show. So hopefully you guys take that to heart and you don't think of it as a point of me trying to dissuade you from making money or trying to take all the fun out of things. This is not a fun thing. This is a serious thing. I try to lighten it up, give you guys some energy in the morning, especially on a Monday morning where you might be a little groggy. But at the end of the day, I try to keep things serious that need to be serious and at least keep you guys grounded and give you a level-headed approach where a lot of other people may give you a more sensationalized approach of, look how much money I made today. And that is not the right way to look at things, because that is the same way you can inhibit gambling and negative, very negative viewpoints for trading in general, where you don't appreciate every dollar, I like to say. The $100 on the stock market spends differently than $100 of cash at the grocery store, right? We all know this from a logical perspective in our head. You might think twice about buying that cereal that costs another 50 cents, but you won't think twice about dropping another $400 on a 0 DTE call or something. It's funny how that works. So bringing that down and helping maintain the realism of how much money really is, the value of money, as it translates to your real life, is kind of what I try to inhibit and promote on the show. So hopefully you guys understand that as you watch, and as some of you come back. I know a lot of you here are here every time I stream, and I appreciate your support, but hopefully you guys especially are the ones that take away from that kind of mentality to something positive to move forward with. All right, look at Grab. We wicked down, we came back up. Now we're right around that 591 level. Looking good. I did have, and I'm not going to share this live, but I did have a position that filled on Grab that I opened in as the market opened. I had it placed on Friday and it filled today. So I now have a new position open on Grab. I will hint that it's not a short position. I will also hint it's a little bit riskier. Do with that what you will. And I said again, and I'll continue to reiterate, when I find good opportunities, I talk about them a lot. It's because I think they're really solid opportunities, and the risk is good. As long as we're over this 5.91 level, the risk is good. This is a solid opportunity. Do with that what you will. And also, I will not go to jail for pumping how big is this company today? $24 billion company with my 100-esque viewers watching me right now. So, won't go to jail for that. Nothing sketchy going on here. All right, the Qs are firing down a little bit here. We saw a little preview of that on the SPY here. Watch the 659.11 area. We're only 15 minutes into the open here, so don't get too caught up in anything just yet. IWM, so your small caps are getting a pretty definitive bear trend on the day thus far. We are going to pop back to our sectors here in just a little bit to see where we might be standing here on the day. Volatility has been climbing since market open. Here's your 1 minute. VVIX is also moving up. So this is multiple signs to be risk off today as a whole. How's our volume on the SPY actually? Volume is okay. VMA right now, 217K. So it's roughly on average 217,000 volume per minute right now on the SPY. On the 5 minute, we're clearing 1 million still on the 5 minute. So volume's still really healthy here, which I would expect on a Monday morning. But as you can see, price action's really tight. We're not really going much of anywhere. Basically double bottomed on the day off that open wick. We just wicked it right here, moving back up back to the POC here. Very, very, very tight range on the day so far. Not even $1 range on the SPY. Low a day so far, 659.48. High a day, 660.30. So we're, what is that, 82 cents, something like that? 92 cents, 92 cents range so far. Not even $1 on the SPY. So be very, very, very cautious if you are trading this open. As I said before, when this IV is this tight, this low, the SPY doesn't typically make very big aggressive moves. And considering what we know about coming up in the week, I'm anticipating, I mean, I'm surprised the volume's holding up how it is. It is Monday though, but I'm anticipating a volume drop off and just kind of a very mild day on the SPY. Bad day to 0 day trade the SPY unless you're sniping the bottom or sniping the top, honestly. Eddie's got jokes. Eddie in the chat says, have you heard of the stock Grab? Yeah, so Grab, I haven't heard of. Let's look at it real quick. Oh yeah, Grab is Grab Holdings. Funny joke. You know, I tipped off my my boy Drake on Grab. He's very happy. That's now going to be an inside joke that the 100 of you, I'm going to carry that joke with me. If this channel grows and I've got like 1,000 live viewers at some point, I'm going to randomly mention Drake and only like 100 of you are going to get the reference. But that's solid. I don't mind. Toby says Drake told him about Grab first. Yeah. Like I said, he's the next Warren Buffett, so he's better than me. I'm not going to say I hold a candle to Drake with his investing prowess. Oh man, those calls are up. Those calls are up. Woo. I'm going to check real quick. Nice. Very nice. Very, very, very nice. I do want to highlight a stock that I made a video on, and I want to put it back on your guys' radar. I'm spelling it wrong. CRMC. They had a ticker change, so they're no longer big. But this is CRMC, if I can load it. There it is. Now, this one doesn't come without its risks, but it's finally looking like it's trying to turn things around once again. There's been a few times where it's been looking like that. You got a massive trigger here at $4.73. Very close. You're about $2 off. You also got the 50 MA there and the 48 EMA there with a red star coming down. The daily's starting to try to make higher lows here overall. The weekly's trying to trend to the upside. The monthly is trying to put in a higher low on the month, which this month isn't done yet. Watch CRMC. This is one of those names that I brought to you guys roughly around this price. I think it might have been $5, so it might have been more expensive. This is one of those names where if you sat on shares, specifically equity, for a long period of time, I think you're going to be very happy. Very happy. So I want to put it back on your radar for you to consider. You do whatever you want. But I would heavily suggest you consider maybe just reading up on CRMC. It's commerce.com. Take a peek. See what you think. Obviously, no trade comes without risk. But this is a company where the risk reward makes a lot of solid sense. Even if you want to risk all-time lows here, you're risking like 12% drawdown. And I will remind you, now this was a long time ago, but the stock reached $162 back in the COVID bubbly time. So was that realistic? Maybe one day. But more realistically, a price target between 12 and 24, which is still a 300 to whatever that is, 700, something like that, percent gain right now, risking 12% downside. Really, really, really solid on equity if you're patient. So I want to bring that back up to you guys again as something for you guys to possibly consider. Back to the show. Adomola on Kick says, nice streaming and I love it. Add me up on Discord to join your live stream. No thanks, but I appreciate you checking out the show. And sorry if I'm trolling you a bit. I troll people that aren't on YouTube because they tend to be a lot of trolls on all the other stream, Twitch and everything. They're like, hey, do you not have enough viewers? DM me on Discord and I'm going to bot your channel. I don't want that. Don't do that. I like my little nest egg of people I've got here. You guys are awesome. You guys actually talk and participate. You guys are the guys I want to come back. I want more people like that. Eddie says, those calls bought me lunch. Hell yeah, let's go, Eddie. Watch right here on Grab. Right now, the 601, you have the 200 MA with a 604 trigger. You break 604, we're going today. This is a crazy candle on the day here so far. Now, as I said, I would anticipate some level of consolidation, but there is a chance you break that 604 today. You mark up 620, 625. If that goes, you're going to start delta hedging the $6 calls like we talked about in the pre-market. So it's going to push you to 650. If 650 breaks, you get a little bit 660, 670-ish. The 6.5s are going to have to delta hedge. So this has a potential for gamma ramping. But please make sure you understand what that means and make sure you understand. And if you don't, ask in the chat. I don't know what that means. Can you explain it? And I will, but I'm not going to explain it if you all understand. So there's an opportunity for a gamma ramp here. Very similar to what was a short squeeze plus a gamma ramp on GameStop way back in the day, right? Not saying this will replicate that move by any means, but what I'm saying is it's the same, market plumbing, right? This one doesn't have nearly as high short interest though. There are some shorts, but it's not like whatever GameStop was like 500% short or whatever ridiculous amount. But technicals are great, and I love the options chain. Back to the market, and I'm going to keep talking about random stocks. So if you guys want to drop some in the chat, we'll look at a few together, because that's kind of what I've been doing lately on the program. It seems like you guys like that. Actually, quick little poll in the chat. Do you guys prefer when I'm just talking about like what we're seeing live right now, and highlight just like random stocks or talk about stocks that you guys suggest? Or do you want me to go back to including some segments? Now, obviously, some days I'm going to have segments like if I do stream on Thursday, I'm going to explain essentially what Powell said during the FOMC meeting, walk you guys through that so you understand that, because I think that's very important. But other than that, do you guys prefer this kind of like newer format for those of you that have been watching for a little while that I've been going with for the last like week or two? Or do you prefer like the older format where we're mixing live trading, but also having those key segments, I guess I should say? Kind of want to get a feel for what you guys think, because last time I polled you guys, the takeaway was that you preferred looking at things intraday and live trading, so to speak. If the opportunity presented itself for live trades, you guys preferred that. So just want to touch base. Let me know what you think in the chat, and also let me know if you have names you want me to check out. We'll take a peek. Toby says prefer just talk and interaction. Toby, I would love if every single person was typing in the chat and we had like an active conversation, but unfortunately, not that many people watch me yet. I'm not that cool or popular. I don't have the clout just yet. But I appreciate when you guys do, and I try to at least, that's why I said, if you guys ask questions or whatever, answer those questions, because if you're thinking it, someone else is probably thinking it too, and I'd love to help you get over that hurdle, so to speak. Believe it or not, I'm actually contemplating a short here on SPY. It's just I don't love the range today. All right, so let me say it like this. Typically, based on how these candles look, I would open a short right now. Let's see how that would have performed. I didn't take it, right? I'm being transparent. I didn't trade it. You could paper trade it, but typically I would short right around here. And realistically, I mean, I'm not going to get anything for it. We're talking like 30 cents. That's why I said it's not worth it. It's just not. Hacker says prefer trading if possible. Yeah, and I look for those opportunities while I'm live. If they're just not there, or like I said, the risk isn't there, like the risk to reward isn't there, I'm not going to take them. That's why I said I would typically take a short here on SPY, but the dollar gain is going to be minimal, and the risk is going to be a little too high for me, because you're kind of in a bull trend here where you could just kind of slowly plot up, but it's just not worth it, in my opinion. And conversely, even if I want to take calls. So I would short basically on this wick here, which so far I'd probably be green. I don't know if you want to paper trade, you can. And basically just use high a day as a tight stop. So I'm only risking like roughly like 8 cents upside by 30 cent downside. So if you're someone who trades futures, that's pretty good, because it's like 3 to 1, 4 to 1, whatever. And right there, I probably would have stopped. I'd wait for this candle to fall out, see if we get another wick. If it closes above, then I'd close out. That's how I would have shorted this if I did take a short. It's just not appeasing to me. So I wouldn't have closed yet, because we left a wick there. So I'll paper trade this. We'll talk this one through. Just in terms of reading the candles here. But if we break another high, now I would have closed out. Because now there's more of a chance that we continue trending to the upside here. But again, either way, like that would have been a 2-3% loss. Like it would have been marginal, but again, the gains would have been marginal too. I maybe would have made 5% unless I got a clean entry on a 0 DT and maybe walked with 10. Maybe. Grab is over 6. Watch 604, 603. Let's go. Come on. There's 604. Oh, baby. Oh, baby, oh, baby. Da, 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 da. Oh, my heart. Be still, my heart. Be still, my beating heart. All right, now I'm going to tell you guys. So I opened up a swing position for $6 calls for this week on Grab at 10 cents. They are now trading 20 to 25 cents. I'm going to hit the dab real quick. Nice. So what you want to understand is intrinsic value versus extrinsic value. Once this is over $6.10, I'm at full intrinsic value, meaning if it stayed at $6.10 for the rest of the week, I'm not going to lose money. I'm at full intrinsic value. So it's important to understand how much I'm in the money, how much I'm out the money. Right now, these are setting up over 100% gain, where I'm just going to monitor it. Again, breaking 604 is big. If you can hold above that, this could and should rally. My next, where I'd look tentatively for more volume specifically, right here at 610, because you got 168 shares parked here on the level 2, over 610, around 620. Once you get to around 620-ish, you're more than likely going to see a spike in volume, which I hope we can see live so I can show you guys. You're more than likely going to see a spike in volume roughly around 620, 625-ish, and that's more than likely going to be attributed to that delta hedging that we talked about from market makers, where they're going to buy shares at the market to cover the roughly, well, how much volume is on these today? Because people could have bought more. So let's see, volume, hold on one sec. Volume. Okay, so you have 3.5K volume on these grab calls right now and 19K OI. So the market makers are going to have to hedge for roughly 23 to 24K $6 calls, so times that by 100. So they're going to have to buy 2.4 million shares at the market. They're not going to do that until there's a higher probability of that happening, and the pendulum swings both ways. So if we break over 620 and they buy those shares and then eventually we come back down, they're going to offload those shares because they don't need those to cover, right? So that's why an opportunity like this is very interesting. That's why I'm explaining gamma ramping and how market makers work essentially. Because if you don't understand those things, yes, you can look at the chart from a technical perspective, but if you don't understand those key points, you'd never know otherwise. So that's what you want to look for with like these higher momentum names. Yes, the chart has to make sense, but you need support from the options chain to really drive that further price development. So we're going to keep an eye on this one right now because we're at that 610 wall right now. And specifically, some people might have asked me or have asked me in the chat before about how I use level 2. Now I will tell you level 2 is a useless tool 90% of the time. Do not use level 2. 10% of the time right now it's a useful tool because it gives me an idea on higher momentum names, so a name like this where it's generating some momentum, on where there could be a potential wall where sellers are potentially parking themselves. Right now, like I said, it's 610. So seeing that on the ask gives me an idea of a potential resistance there. And typically, when these walls break, you tend to get a little bit of a thrust to the upside here as well. So those are the kind of things you want to look for. That's when I use level 2. Other than that, I don't really use level 2. And if you don't know how to get this, it's like most brokers charge $2.99 for it, which another $1 more for that is probably not worth it. But like I said, for $2.99, most brokers, some do like 99 cents, whatever, you can get this information as well. And you can use this information on like I said, for momentum names. That's where I would use level 2. Otherwise, you might get caught up in the weeds with trying to use it. I just wouldn't, unless you're like aggressively trading 0-day contracts or something like that on like the 5-second chart at the end of the day. Other than that, I wouldn't bother. Cody says, not sure. Have you mentioned Grab before? I haven't. Oh man, Eddie says, now those calls bought me dinner. Let's go, Eddie. Let's go. It would be pretty cool if I could nail a nice like 400% gain. Meaning they get to like 40 cents today. Be pretty cool. I won't get too greedy. I'll probably trim some off around 30-ish cents. So we'll see. We'll just play it by ear. Because like I said, the momentum, the opportunity is there for it to have a stronger push, specifically through this week as well. So I do want to keep that exposure, but I also don't want to be stupidly greedy, right? Now, these contracts are cheap enough where I bought a boatload for, like I said, 10 cents a contract. They're now at 25 cents. So I could shave some off now if I wanted to. I want to see if we can get over that 610 on the day. They expire at the end of the week, and I'm in the money, so I can take it a little slower. Everyone else can do whatever they want, but that's just how I see things, right? But I also know the stock pretty well, and I know we're over the, again, this 591, which we might back test again, or we might have to come back to $6, bounce and go. We'll see. But it's just it's interesting setup. This is another time where I would consider a short on SPY. Actually, more so now than back here. Let's see. Yeah, IV is not even. Now it's like 11%. This range today is going to stay tight on SPY. You're better off trading individual names, like a grab, but you're better off trading individual names today if you are going to day trade, just because, if you are someone who trades the market, I guess I should say specifically, it's looking like we're going to have a very tight day. Conversely, the Qs have been trending to the upside pretty nicely. You're up about $2 from the open, so a little bit more range on the day, so that's nice to see. And a little bit of volatility here on IWM, traded lower at the open to around that 945 point, and then you had a nice little push here. So it looks like you might get some volatility through IWM. So if you wanted to be a bull on the SPY today, if you wanted to trade the SPY today, I would actually use IWM as your barometer for volatility, mainly because I like to look at IWM as my sentiment reader, right? To get an idea of how sentiment is on the market intraday. Because this is it's 2000 small cap, so it's kind of like the underbelly of the market. I want to know how the underbelly is doing because I know how big tech's doing, right, with the Qs. So this kind of paints me a more full picture of that with some volatility, which has been climbing. Gives me a full picture of what to look at on the day. VIX is at the high a day right now, which is not a good sign with VVIX dropping. So this would suggest that volatility would continue to climb throughout the day, assuming these two trends continue to invert themselves, with VVIX coming down and VIX continuing to climb to the upside. So that is moving starkly in comparison, or stark in comparison to the way SPY is moving, or I should say the way SPY is positioned from an options point of view, where volatility right now is suggesting a wider move on the index, if again, assuming trend holds, while the market, at least in terms of options, is not supporting that narrative. That would be another risk off point. When I have conflicting data points, it's another thing where I go, okay, step back a little bit. So volatility is climbing, VVIX is dropping, and looking at the options chain on SPY, our IV is only like 11%, so we're 30% lower than normal IV on SPY. For context. So that tells me something's not adding up 100%. And I don't want to trade when things aren't adding up 100%. I mean, something looks good, we trade it, like I did with Grab, which I didn't talk about in this program, but I alerted in the Discord. You want to just be a little bit more careful when you have an open like this. Let's look around again. NVIDIA pretty flat. Like I said, I anticipate this to kind of just stay in this range here. You're more than likely not going to get lower than 175 today. Let's see. You got a lot of confluence right here. 174.44, 174.91, 174.92, 175.08. All your short-term EMAs are there, plus your 50 EMA. So a lot of confluence right around here. So if you wanted to take a bull stab on NVIDIA today, you can more than likely feel pretty comfortable taking a stab around 175 and using the low a day as a pretty safe stop. Mainly just because of how it's set up on the daily chart. Again, don't bet the farm because there's a very low probability you're going to get a very high move. But some level of a mean reversion. So if you do get back down to here, like around 175-ish, some level of a mean reversion up about a buck or two wouldn't be crazy. Delta for those 177.5 contracts right now is 40 cents. So you got about like 15% gain. Maybe a little bit more because Delta should drop theoretically. Yeah, low a day on those contracts is 155. High a day, 220. So there is an opportunity. Well, not including the open. So there is some level of an opportunity, or could be a level of an opportunity there if you're patient and if you manage that risk, assuming you got in at around 170 and assuming a close at 220, that puts $50 in your pocket. It's not bad. Because it's very, very low probability I think we break under 175 today, unless it's a quick sweep and back up, kind of like you saw right here at the market open. So I'll keep an eye on that. Maybe you'll see me open that trade while we're live. Kind of depends on where things sit. Microsoft, nice little trend to the upside. Again, not too aggressive or anything, but just kind of like slowly trending to the upside. Apple, pretty weak actually. Had a hot open, gapped up pretty good, fired down, and now kind of consolidating at the lows on the day so far. Leaving 3 wicks behind here, so this is actually a pretty decent bull reversal possibility here as I'm actively talking about it. I kind of want to get calls right now. I'm kind of buying on a little bit of too much of a green boy though. A little too strong of a move here that I'd like to buy. Keep an eye on the 240 contracts. I'll put them up here. We'll keep an eye on those 240s. If we come back one more time back down and I can get in around like 105-ish, then I'll consider a long. There we go. All right. I'm looking at the 240s on Apple. All right, I'm long the 240s on Apple at 105. $9.19, 240, call at 105. Again, don't expect the world from these. Not that it will be a bad trade, obviously, but just keep yourself balanced in terms of your expectations. We'll pull up the Apple chart. Keep an eye here. It should take a minute to get out of here, but once it gets out of here, it should push. At least in my opinion. So we'll keep a tight eye on Apple right now. Whew. I just checked on my grab leaps. They're looking good. They're looking pretty good. All right, so we'll come back to Apple. I'll leave it up here right now. Again, I'm not anticipating this moving out of Dodge here pretty quickly, but getting back to around 236.35, another buck. So if we're looking from a completely very low conservative estimation, that puts 25 cents in your pocket per contract. So what's that, $1.30? So conservatively, $1.30 exit on a 105 entry, roughly about 24% gain is what you can conservatively expect if we get back to roughly around this little area here at the top of this red candle. Here's what I'm theorizing here. Looking like the lows could hold. Worst case scenario might sweep the 200 MA on the 5 minute, but it should hold. Should. Especially if the market's just gonna like drift up today, or there's a, like I said, not really go too much of anywhere. You're more than likely gonna see a little bit of a reversal there on Apple. Wow, what a stark little fall here on IWM. And what's crazy about this, like just looking at the candles here, about $1 move, but it's just it's volatile within a tight range, which you don't love to see. Apple calls are back at entry. Here's Nvidia. Like I said, around this 175, I'm interested. Mainly because of the daily chart. I'm not going to rush into it, but I am going to keep an eye on it here. Because this is where it's interesting to me. Like literally right here. Keep an eye on the 5 and the 1 minute for potential entry. I don't anticipate it to break low a day. So it really should hold here. But again, we have to keep in mind what our risk to reward profile realistically looks like. If I'm looking at the 177s to get a little bit of extrinsic, maybe a little bit of volatility in there, you got 36 cents on the delta, which is what I look at to convert, or not conversely, what I look at to calculate conservative gains. So getting back to high a day, we'll put $36 more in your pocket at a 160 entry. So that's, like I said, about 15%. It's nothing crazy, but I'm going to need to see some level of a bottom be put in here. Good volume here on a wick. That's part of what I want to see. It's a good start. Needs to continue though. Volatility still moving up here. Very, very slowly. So we're going to want to keep an eye on that as well. But I am very tempted to grab along here on NVIDIA. We'll see if it leaves another wick behind or not. This is why we don't rush in. Not just yet. No, no, no. Let's see if we sweep lows at this point and reevaluate. That's a heavy 5-minute chart though. I don't think it's going to come all the way back down to my LOI down here at 171.58. That's a little stark. Maybe 174 if we break lows. But as you can see, I did not rush into a call on that because it looked a little... wasn't ready yet. The potential's there, but potential means nothing without follow-through. There needs to be follow-through. There needs to be confirmation of the move, and right now there's no confirmation yet. So you're going to see some level of a mean reversion here off of around the lows, but it could get shot back down and pushed lower. So this could be a little bit of a bull trap on a reversal move here. Now, to be fair, you got 1, 2, 3, 4, 5, 6, 7 red candles in a row. So pretty stark, harsh, strong bear move here. So it's not necessarily where I want to be entering calls just yet. I want to see some volume come in. Even if the bulls can put in, which some people would call a bear flag, right? Some level of consolidation down here. I still like to take that stab off of the double bottom intraday and off of where, again, we're at daily support here. So this should hold as long as there's no crazy bad news or anything like that. Apple contracts are about $1. It's kind of fluttering around down here. It is grinding a little lower. It's just kind of staying in a pretty tight range here so far. Like I said, there is a possibility that we come down to the 200 MA on the 5-minute, but you've got 3 decent wicks here, creating another 4th wick. So we're seeing buying pressure here. Use your POC here as your trigger. That number is 235.52. So only 30 cents higher here to push for the upside here on Apple. So keep a tight eye on that. I'm going to watch NVIDIA here just for a little bit because, like I said, I do see an opportunity here for a reversal. SPY is also sitting at a, call it an inflection point. And as I said before, this is also where I would have opened a short. But look how much that short would have sucked. Like, yes, I would have made money. But how much of a percentage move is this? Let's assume I entered here. 0.8%. It's 51-cent drawdown. So that would have been half delta here. Let's just play a game. Half delta if I went at the money on the 661s. Delta, it's 31 cents. It would have been 15 cents. Would have been a 50% gain on a 0 DTE. I hate that risk. But would have made some money. So maybe it's not all bad. Apple near the trigger, about 10 cents away. NVIDIA trying here. So if we get another rejection and we come back down to around here-ish, like 174.80, I'll then consider an entry. It could just push here and go, in which case I would just miss out on. I won't take it either way. I'll just wait and see. Beastwood says, close out most of my swings today. Quite happy. Now time to chill and enhance it. I love that, my friend. I'm not mad at that. Full transparency, most of my option swings are closed. Most, not all. I am long equity with pretty good stops on. And I'm actually pretty decently exposed on equity right now. I'm going to tighten up my stops into Wednesday. And maybe close out a few of these names. Most of the equity names I'm long on are green. The ones that are red are, I'm looking at them right now, marginally red. down 7%, down, and it's from my entry, down 7%, down 2%, down 1%, down 10%. So it's not like there's one stinker I have that's down 23%, but this one I'm like super long on, and it's going to take a while, 25%. But everything else I'm green on, so tightening up those stops is what I'm going to do. In case FOMC works out in my favor, then I get to keep all the extra gains, and if it doesn't, I'm stopping everything in profit, and I can quickly get out of the way if there is some sort of like rapid downside. So that's kind of at least my strategy going forward here. Beastwood says, Hertz has been a bummer, and I had to sit through some crap to close out for a scratch trade. Okay, so I can tell you from experience, and the main reason why I didn't trade Hertz is I used to work at Enterprise at one point in my life, many moons ago. And Hertz as a competitor sucked ass. Like, you can look at someone, and someone who's a rival or someone who's a competition, whatever, and like appreciate that they're good at whatever, right? Hertz was ran horribly. Horribly run company. Their cars all look like absolutely terrible. Actually, I'll say this. If Enterprise ever goes public, which is now Enterprise Mobility, I will be buying a boatload of those shares. A massive boatload. They have a very well-run ship there. But Hertz is atrocious in comparison. Hertz and Avis budget, like, really, really, really bad. Like, really bad. Badly maintained cars, older vehicles, bad service. Like, and that's not just at one location. I've personally used Hertz as well as, like, just a customer. Bad experience every single time. I hate it. So I personally wouldn't even buy Hertz just for a trade, because if I'm going to take a long on a company, like even as a swing trade, there's very, very rare times where I take a long on a company that I don't actually like. My most recent example was Alibaba, and I do not like Chinese companies to invest in. They suck. They are horrible vehicles. I hate that they can just lie about their accounting, and then one day they can come out and be like, hey, we lied about everything. Lunkin Coffee is a great example if you don't know what I'm talking about. And that's a deep fear of mine, because that changes the whole game, and it's a completely additional risk that I'd have to take. It's also ADR shares. The whole thing there I don't like about trading specifically Chinese names. That being said, solid setup, and I wasn't going to overstay my welcome. I made like 20%, and I pieced out. It's good. And it's a massive company. I'm not buying like a weird, sketchy, small company. The other one I may take a stab on, this Chinese company, would be Neo. I don't hate that company. But again, same kind of risk where I have to take the additional China risk of them doing some sketchy accounting or whatever, which is an inherent risk that a U.S. company theoretically wouldn't have to take. Like, that could happen, but much better oversight. So I hate that. Beastwood says the Lyft has been awesome with more upside to go. I am long Lyft. I've been long Lyft. And I've been wheeling Lyft. It's funny. I've been wheeling Lyft now for a while. Not effectively, I'll add. I had a horrible entry on Lyft. I'll share it with you guys. I originally sold $20 puts on Lyft, and I believe it was on their earnings, back on 3/28/24. I'm still long those same shares that were assigned to me at $19.13. So I'm finally green on the trade in terms of equity. And now I can actually sell calls, which is great. Plus, the chart's looking way better than it did back then. Like, way better. And you might have a potential breakout here, which is great. But that's the same reason I won't sell calls on a name. I won't, that's what I'm looking for. I will never try to wheel a name of a company I don't like or don't think has future potential, because I don't want to loot. Because if I'm forced or I'm assigned shares, I don't want to own shares of a company that sucks, that I don't like, right? And I thought Lyft was going to continue to the upside. It unfortunately didn't for a short while, but I was just patient, and now we're back over my entry, and now I can start selling calls again. But again, I'd like to say to you guys, shifting gears in the market's important. So wheeling trading is different than day trading, which is different than swing trading, which is different than investing. So you got to be able to change gears and at least change your viewpoint along with that shifting gear mentality. Damn, that sucks. Beastwood says his Hertz options were down 60%. I had to trade myself out of that thing. It was not fun, but I pulled it off. God bless, my friend. Brahmin said, have you had to use any car rentals insurance? So, here's a quick little aside. Get an American Express credit card and use that as your car insurance. Best not financial advice. I don't know if that counts as financial advice, but best advice I could give you when renting a vehicle. I will tell you that a damage waiver that you get from a car rental company does make the process a lot easier. I will also tell you that I was the best in the Northeast region for 10 months at selling or upselling essentially insurance and other things. And I can tell you, just being blatantly honest, that the practices that they use to pitch said products to you are not clean. And it's part of the reason why I left that company. I felt very dirty and dishonest, and that's not how I want to feel ever. And I didn't want to do that anymore. So the branches make a lot of money off the insurance because a lot of times people don't use it. I will say the times that it has to have been used, it's a very flawless process, at least with Enterprise, where you basically hand the keys and walk away. Like, even if the car was a complete total loss and exploded in a fiery wreck. Like, anything can happen as long as you weren't, like, drunk or on drugs or whatever. If you were just driving and, like, catastrophic thing happened that was completely out of your control, you can just walk away. Whereas with the insurance, you got to go through your own insurance or whatever. A little bit more of a process, obviously. The second tip I'll give you, so a little bit of, what do we call it? We'll call it a dark, or... You ever see those videos where people recommend like evil things to do? There's like, this is an evil thing that you can do, which isn't great, but you could do it. So here's an evil thing you could do that isn't great, but you can do it. Whatever you do when you rent a car and they ask you, oh, do you want to buy the damage waiver? Do you want to buy our insurance or whatever? And you say no, and they go, cool. I just need to know the name of your insurance company. Lie. Because if something happens, you scratch the bumper, whatever, and they want to ding you, they're just going off your word. So if you say you have Geico when you really have State Farm, they're going to go after with your name and go to Geico. And guess what? You don't exist there. So that's your unethical, unethical. Yeah, Brahman, you just said it. Unethical life pro tip. If you rent a car and you don't take the damage waiver, you don't take any sort of additional protection or whatever. And like I said, it's not a bad thing. Statistically, you won't use it. But if you do use it, it does make it very convenient. So there is some value there. If I'm on like a short trip, sometimes I buy it. Like, it kind of depends. But you tell them the wrong insurance company and you hand them the keys. Now they will block you. You'll be put on a do not rent list. You'll never be able to rent there ever again. If you fully total a car or whatever and they don't claim through your insurance company, you'll never ever be able to rent again, but you never have to really pay. So I'm going to catch up with the chat in a minute here because Apple got a little bit of a push here. So we're going to pop back over to Apple. Again, my first take profit point is going to be around this like 236.31-ish area. We're currently at the 50 MA here. Those contracts currently are trading, what is that? 112. So I have a 1.5 entry. Sorry, $1.05 entry. They're currently trading $1.12. We're up about 6%. Nothing too crazy here. But you should see the 5 minute, 5 minute turning around. Look at your MACD starting to float to the upside. You still have some bear momentum here, so you're not out of the woods. But if you do cross over this short-term target here of 236.27, and you do get above the 200, you do get above this LOI, you're going back to high a day, and these contracts will appreciate a lot. So my first trim point, it's going to be probably roughly where the 200 MA or VWAP is, so these 2 points here. Roughly around there is where I'm going to trim. Probably put a stop on just to be safe. But there is a possibility you get to this LOI, and if volume comes in on this LOI, we push to the upside even more, about another buck, which would be pretty solid. These contracts at the high a day worth $2. So you could have a nice little 100% gain, just shy of that, if we get a nice push on Apple still. So we'll wait and see. All right, back to the chat. Cody says exactly why we don't want reporting to move to semi-annual. That's a whole thing. I'm not sure. So if you guys missed this, this morning, Trump put out a tweet saying that we're going to now be moving to, or he's going to try to push companies to report semi-annually versus quarterly. I hate that idea. I think it's stupid. He's saying it's going to save companies money. I don't care if it saves companies money. What about my money? Companies can then just fluff things up short term and say how great their business is without us checking in every quarter, being able to look at their books theoretically. And that leaves a lot of room for especially smaller companies to do some really dirty tricks, in my opinion. So I think that sucks. That's an awful idea. No. I vote no. Beastwood still in Baba Commons chilling with a stop. Yeah, I got a little wicked out of them. They had a little bit more juice in them, but solid. Beastwood also says, I feel one reason I got out of advertising dog eat dog and need questionable morals to sleep at night. Exactly. Yeah. It's funny because my wife asked me like a while ago, she's like, you were so good because we were cleaning up some of our stuff and I had a bunch of awards and stuff. She's like, you were so good at this. Like you were like literally like the best I only worked there for whatever it was. I think it was maybe a year. And I legitimately 10 months in the whole Northeast. I was the best. And she's like, you did so good. Why'd you leave? And I'm like, I hated myself. Like it didn't feel good. And I don't like not feeling good. I don't think anyone does. So that you get to a point, and now I'm in a much better place in general, but you get to a point where money doesn't really matter. It matters, of course, but morality and your time with family, time with friends, whatever, matters a lot more than the money you make. On that subject, I'm going to trim some apple here for 17% gain. Nice little trade for you guys. See, we found a nice little shining gem in the turd of what was out there today. So, I'm not mad at that one bit. Cool. Sorry, I've got like 5 things going on right now. I'm a little scatterbrained because I got multiple alerts firing for different things. Promise is good to know. Thank you. Yeah, that unethical unethical life tip, it's solid. It's solid. Make sure you write that down. Peacewood says he's blacklisted with Enterprise. Yeah, they won't forget you, man. I had someone come in. They came in and they were, so we get an alert on the screen that says if you're blacklisted, why you're blacklisted. And the alert popped up on the screen. I'm actually going to trim a few more here on Apple. So real quick, because now we hit basically my price target here short term. Take a few more off, 21%. Slap a stop loss on break even here. And now we just kind of get to chill on Apple. So now, again, real quick, and I'll get into my story. This area is going to be decent spot of resistance. Right here, you got the 200 MA on the 1 minute, decent spot of resistance, and this LOI here. So between basically here and another 50 cents higher, it's not going to be a clean, easy move. Like we had this nice little push here. It's not going to be that. It's going to be a little bit of a fight. So taking a good amount of profit now is what I personally did. And I put a stop loss on it, break even. I will move the stop up as we move up. Because I think on the day here, we've got a lot of room to go. If it gets some volume and we push. So that's promising, obviously. But if not, I'm not going to, we don't force it, right? 21% is a fantastic gain on the day. Walk with that, be happy with that. Brahman says decent sell off on Tesla. Yeah, it broke beneath that LOI here, and it's not, I would be cautious still. Even as a bear, this isn't, like, you're obviously going to have some people taking profit, right? It makes sense. Even as a bear, this isn't really a clean short either. I think you're going to see the bulls pull it back up, actually. Of course, you could day trade, like intraday trade, time the top here, get out here, whatever. But at least on the daily, more than likely going to revert back to the upside here. But anyway, I got an alert on the screen that said, blacklist, whatever I forgot what the message is, but it tells you why they're blacklisted, essentially. And it was because they turned in a vehicle that was covered with, and I think it said hazardous, like biohazard material, as well as like needles. Like there's a very detailed description. So essentially, because I was like, I'm sorry, I can't rent to you. There's a warning and whatever. I'm like, what happened? Like I asked someone, like, what happened? It's like, that thing was from like 10 years ago. It'll keep you on record. Essentially, they went on a bender, got drunk, apparently got a bunch of women of the night, as well as some drugs involving needles, and ruined the car. I have stories for days from working in other retail jobs, but including Enterprise was one of the most interesting jobs I think I've worked because of the quality of people you get to come through the door. Very interesting. Good company, solid company, but Very interesting. Very interesting. Spy, a little wiki here. A little action here. And the Qs. All right, someone got pushed around. Look at IWM. Price action's wild on IWM. We're not going anywhere. $1.50 range today. But if you caught the top or the bottom, you're riding a solid gain. VIX is slowly moving up still. VVIX is still moving down. This is your sign to be risk off today, guys. I'm going to say it again. That Apple play was solid risk to reward. That was a one we kind of handpicked out of the turd city here. That's a solid play you can continue to run with, again, with a stop on, and it may still bear more fruit. But whenever you see the VIX going up and VVIX going down, and the market, especially in this case, the market going up, that's a really bad sign. Because typically the VIX goes, when the VIX goes up, the market goes down. Typically. Now, I'll be the first to tell you, it's never a one-to-one relationship. Because as I will remind you, the VIX, how it gets its value, is from the spread of SPX contracts across all chains. So that spread getting wider makes sense because people are probably pricing in a bigger move on SPX between now and the end of the week. So getting some VIX expansion does make sense, but that doesn't exclude the additional risk here on the day, with VIX still plotting to the upside, and the fact that VVIX is moving down. So remember, VVIX is the volatility of volatility. So how likely is it that volatility swings the other way again? So it goes down in this scenario, right? And as VVIX decays to the downside, that is suggesting to me that the trend that volatility currently has, in this case up, will continue to the upside. So that is a very, 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 very clear message to me to be very risk off today. I've made 2 trades, both of them technically on the program. The Apple trade that you guys saw, and the grab trade you did not see, which I will keep you guys abreast to if we can get over the 610 level. But other than that, today's a really good day, especially if you haven't been doing this a long time, you're still learning, whatever. Don't push it. Tomorrow, I'll be live tomorrow. I'll walk you through it. Things may change between today and tomorrow, but tomorrow's probably going to be a little bit more of the same. You don't want to push it. You're going to want to look for opportunities like we saw in Apple where there's a good risk to reward, even if there's just a small move, and in this case, like 20 cents or 20%, pretty solid. You know, take that and run. That's why I put a stop loss on. Like, it could keep going, but I'm not taking that risk because of how the market as a whole is sitting. Just looking around real quick, and then I'm probably going to pop off of here. I had a really good stream today. Lots of good conversations. I appreciate you guys for participating in the chat. We had lots of good talks. And those are my favorite kinds of streams, when you guys get to ask me random questions and I can tell you about how some guy had a bunch of hookers and heroin in the back of his rental car. Somehow we get to that point, which is fantastic. That's where I love bringing conversation eventually. Those tend to make the most entertaining streams. That's what I love to bring you guys here on the program. Some education, some entertainment. And guess what? During this whole time when we were talking, just kind of hanging out, we made some money too. It's a win-win-win. You come here, you make money, you're moderately entertained, and you get to hear a story at the same time. You got everything and a little bit of education thrown in there. What more can you ask for? This is like PBS on steroids. In a good way. With like 4% of Comedy Central. Nothing more could you ask for from looking at red to green lines on a chart, in my opinion. And that's what I pride myself on, being moderately entertaining while helping you make money and not having you potentially lose it by making boo-boos that I might have made in the past and will probably still make in the future. But we learn from those boo-boos. Let's look at our sectors. I'll leave the chat open again for a few more minutes, so if you guys want to drop anything, now would be the time. We're going to check out our sectors. We'll check the market one more time. I'll walk you through what to look out for the rest of the day. And then it is time for me to eat lunch because I've been up since 2 o'clock and I'm hungry. So let's look at our sectors real quick. And just a quick glancery look here. Not much has changed. So our defensive sectors still are moving to the upside here overall in the day. XLU arguably just kind of sitting. I mean, it moved up a tiny bit, but kind of just sitting where it has. Not much happening there. You did get a little bit of a rally here on energy back to the open. So that's nice to see if you're energy long. Staples getting hit. And again, for some reason, which I'll have to do a deeper dive on this, I think about a bit more. We're seeing Staples selling off when our more defensive sectors are actually doing well. Now, just thinking about it out loud, part of the reason where I'm theorizing staples are seeing more downside than their other defensive partners. In this case, maybe due to the fact that the market may be leaning more recessionarily, leaning towards more of a recession, where you typically see some strength come into staples. But because of the tariffs, perhaps staples are having a harder time turning a profit, which you kind of got an inkling of that with Target's ER, where wasn't a fantastic ER. It wasn't bad, but could have been better. And I'd file that under a staple. Whether or not you agree with that, I don't really care. I'm considering it in that industry of being a staple, along with like a Walmart. But I know obviously like you got your Heinz ketchup and other companies that are legit staples. But as the kids say, the vibe that we're seeing with consumer staples could be that the tariffs are actually harming them. And that might be why we're actually seeing a little bit of a discrepancy in comparison to their defensive peers, where energy has been more bullish because energy prices are going up and everyone needs energy. So it makes sense that that's not going to change. Even if tariffs affected it, the price of energy would just go up theoretically. And energy and utility companies, for the same reason, would still theoretically perform. So there wouldn't be a reason for them, at least in my opinion, that they would drop from results from tariff and other overhang. Whereas XLP, you do have that risk, at least in my opinion. XLK is looking pretty solid on the day, up about 0.4%. Like I said, don't expect anything phenomenal today. Real estate flat, materials flat. Industrials are getting a little bit of a move here, so maybe keep an eye on industrials. If back test, come drop another 30 cents here. Maybe pick a few names out of a hat here on industrials today. Could be interesting. I'm going to look at that after I hop off of here. Healthcare grinding to the downside, basically rejecting the 50 MA continuously, so we might see some bearishness come through on your healthcare. I would watch specifically, I'd watch your small cap, like your medical companies, small cap drug companies, biotech. If this trend continues, especially where we're sitting at the daily, you got, again, a sandwich forming, as I like to call it on this program, where a longer-term MA is pushing against shorter-term EMAs. We actually could see a little bit of bearishness come through here on healthcare, and that's really going to weigh more heavily on those risky biopharm names, those risky smaller drug companies, stuff like that. So you're going to want to keep an eye on that if you have that kind of exposure. Banks are okay. Just kind of okay. Like I said, I anticipate banks to continue to slowly grind to the upside. That could change after Wednesday. We'll see. Consumer discretionary. This was test. This is kind of fudged by Tesla a little bit. So that's a crazy move. This move is like a 1.2% move on consumer discretionary. It's pretty crazy. That's solid. And comm services is pretty big. I want to look into this as well today. Get a peek on why we're getting such a big move in comm services, or at least who is lifting the heavyweight there for comm services. All right, those Apple contracts, we're trading around 115. I almost got stopped out there. The low was 107, so those are still rocking and rolling right now. And lastly, we'll look at the market, but Toby requested, or at least he said, Peloton on the weekly. I want this to move. And as you requested, Toby, I opened it up for you and I worked my magic. There's your high volume. You're welcome. That's right. You're welcome. Seals in the chat. Let's get some seal emojis. Toby, say thank you. I just moved a $3 billion company all on my own. You're welcome. No big deal. No one report me to the SEC. No, but in all fairness, this was the one I was talking about around like 784, where I wanted to reconsider a long entry. I did not take that long entry. To be fully transparent, I was a little, the word I like to use is trepidatious, a little nervous. I was going to come back to this name after Wednesday, where I might miss the move, and that's okay. And I actually like what they said in their last ER is a lot of like potential for the future, cost-cutting measures. They're looking at now like renting and stuff like that, and buying back older bikes, something like that. So there is some like nice steps in the future for Peloton. But I would personally want to wait a little bit later. It doesn't look bad. The daily looks great. The weekly, not bad. You got that downtrend there, which you can't really see, but you draw a line there. You got a little bit of a downtrend. Wouldn't surprise me to get a pop on this. forming a little bit of a pennant there on the monthly as well. So there is opportunity here. But if you're not already long, I think the prudent thing would be to wait. For me personally, I'm waiting to see if there is a better opportunity on Peloton or that Catalyst is out of the way. Now, what I want to look at as we're talking about it, this is one of those retail names. So you want to keep a peek specifically at the options contracts. The call side of the chain is loaded very heavily versus the put side of the chain, which is not. So, Toby, this would favor you very greatly, especially now that you're over 8. These $8 calls more than likely are going to get delta hedged for if we can get, again, similar to Grab, north of like 820-ish, 825-ish, where you're going to see, watch that volume for whatever that is, 150,000 shares to come through. We got a little bit of a bump there at 8.5, not much there. And then again at 9 and at 10. So there's an opportunity for a gamma ramp here. I would like to see more on open interest, but it's not that it's bad, right? It's only going to help you. And you've got nothing, conversely, on the bear side, unless you get dropped to 7, then you're going to de-hedge, right? You're going to de-risk all of these calls that were hedged for theoretically and, hedge for this bear side at 7. So between 8 and 7 is a real sticking point. You need over 8, like I said, 820-ish to feel more bullish, and you need to stay above 7, 730. That's not looking at technical levels. It's just kind of where I'm assuming where we would see some de-hedging take place. Let's look at my LOIs here for better confluence. 738. I got an LOI there. So if you're putting a stop at 738, you're probably just fine. Now, obviously, you see a volatile move this week off the back of news. That's a little harder to control. So be mindful of that. All right, guys. We'll look at the market one last time. Boring. All right, nothing much to see. Keep an eye on volatility. Like I said, VIX has been climbing to the upside. Meanwhile, VVIX has been mostly trending down. You got a little bit of a move here to the upside on VVIX. So this would inspire me to be very defensive on the day. For Apple, for that long trade, if you are or took a similar position, right here was my first trim point, which we're back at in case you missed it. 200 MA, which is right here. If you want to take a little bit more off, you can. You're only going to get like another penny or something. And then 236.85. That's the big level where I'd probably look to take another trim here. Over this LOI, you're going to get back to high a day. More than likely. So the risk reward here is pretty solid. You're at about $1.33 right now off the 200. So quick math is like 27% gain here. I guess I'll watch this for a second and see if we tap the LOI. Eddie says, can you check out what Grab looks like? It has potential over 610. Yes, we'll go over to Grab one last time as well. And then Brahman asked, long-term thoughts on Monster. Double inside bar on the weekly, perhaps bullish momentum coming in soonish. Personally, I don't trade Monster. Personally, I stay away from a lot of the crypto names. Some people out there bread and butter, they trade certain stocks all the time. I have not seen a lot of success trading crypto names. So I tend to stay away from them, even from like a technical basis. I'll tell you what I see. But I would take what I say with a grain of salt, mainly due to the fact that regular analysis for me doesn't tend to work for whatever reason. Maybe, I don't know why. I just don't have good luck with crypto names, so I tend to not trade them. So that's just a spot of weakness that I know I have, so I can look at it for you. But I'm not going to, I would say take what I say with a grain of salt, but we can take a peek at it. It's not MicroStrategy anymore, it's regular strategy. Regular strategy. All right, grab at 605. We're gonna pop back to Apple here, hopefully before the end of the stream. So yeah, that 610 level, we still got about 152k shares parked there. Again, once we're over 610 on Grab, now keep in mind you've had 1, 2, 3, 4, 5, 6, 7. Today would be the 8th green candle in a row. That's a lot of momentum, which is great, and I'd love to see it continue. This may set up for a parabolic short. So now I'm giving you a little bit of a bear reset here. If we see higher volume here today, which is very likely if we break over 610 with some momentum, especially if we get all the way here to 661, I would move very defensively, very short term. So if you have short-term exposure, I'd move very defensively. If we get all the way to 661, which would be a massive move. That's like 10% on the day. It'd be huge. Because there'd be a strong possibility of getting some level of a reset. But again, what I want to see for Grab is holding above 591 on the week. That's all I really care about. It does need to cool down. Granted, the move has been cooking for a while, so getting this much gas, like this much momentum, this much push, is somewhat expected. especially on a strong technical break, again, on the daily and the weekly and the monthly. The only other thing I can't account for with this name specifically is in the event that retail FOMO into this, which they have been. Again, I brought you this name, I don't know how long ago, but the video's on my channel a while ago when people weren't really trading it and people weren't really interested. The last time it had this much hype was back here-ish, about a year ago in November, where it had like this much hype from retail. So if we see that retail hype come back, that could muddy the waters a little bit, right? But what I can tell you is breaking over 610, you're going to want to look for 620, 625-ish. Not for a technical reason, but again, to see if we get some delta hedging, which would be an aggressive buy, typically at the, typically slapping the ask, typically in 1 minute, like a sudden 1 minute candle, it's not typically a load kind of thing. It's typically right away. That's what I'd be looking for. So 610 and then again 620, 625-ish to see if we get that delta hedging. Could be earlier too. In general, your rule of thumb, watch volume. Just watch volume. As long as the volume's there, you're solid on this one. And as long as it's over 591, especially if you're on equity, this is cruise control in my opinion. You are sitting real pretty on grab. And I'll talk about it again tomorrow, and I'll talk about it whenever I'm live, because this is one of those, what I brought you guys that concept, and I don't think we liked that. I don't think anyone liked it, but it was the, when I was bringing you guys like longer term ideas. I'm trying to remember what I called it, looking at my notes. I mean, I gave you guys some stocks, and I was like, this is a good idea, here's why, and give you a quick little rundown. Grab was one of them, and there were more like long-term ideas. Cron, C-R-O-N, I kept down here for you guys. That's one of them. SEMR, based off the all-time low. That was another one. But I gave you guys a few of these names. They are solid names. You're going to want to take mainly from a risk standpoint. That's what I like. They're not bullish or bearish. They're good risk to reward setups. Those are the kind of setups I love, because you make the most money with the least amount of risk. At the end of the day, what more could you ask for, right? And as a reminder on open, you're probably going back to where I said we're going back to. If you don't know what I'm talking about, check out the video on my channel. I'll give you a full breakdown on open, because I know a lot of you are exposed to that, so we touch on it. Anyway, that's about it that I got for you guys today. Tech might kind of double top here. Don't forget, IWM still has some upside to that 242.39. That's not impossible still. Just saying. You want to keep an eye on that one. And you guys know what you're looking at on Apple. Okay, feel pretty good. You guys are set up for success for the rest of the day. Make smart decisions. Don't make dumb ones, right? I'll be back here tomorrow at 9:15. I hope you are too. Not just because I'd love for you guys to hang out with me, but also because you didn't blow your portfolio making stupid mistakes today. And if you did, then you wouldn't be back here tomorrow. So hopefully you don't do that. Hopefully you made a little bit of money, had a little fun, maybe a laugh or two with me today. But I appreciate all your support. If you haven't already, before you pop out of the stream, drop a quick like on the stream or a comment, say bye in the chat, whatever, some sort of interaction so the algorithm appreciates it, appreciates your watch time, and helps me out as I'm just a little fish trying to, grow in this game of financial influencer. Just trying to get a little bit more, spread the community a little bit, because I think we have a solid community here, and at Exclusive Trading. We have the best, and I want to continue to bring you guys the best. With that being said, some will say you may need an edge to trade. Well, I like to look at things from a different angle, and that's always what you'll get right here on the Atomcash angle. Have a great rest of your day, guys, and don't forget, precision beats prediction every damn time. I will see you tomorrow at 9:15 a.m.
The time has passed, and that's a wrap.